Our final section in the cash flow statement are financing activities, and they're cash flows that result from changes in the firm's financial structure. So there'll be an inflow from either capital or an outflow from drawings, and an inflow from borrowing money or an outflow from paying it back. They're the only four items that will appear in our financing section. So looking at whether it's a positive or a negative, it's not quite as simple as with operating activities. A positive or a negative is acceptable depending on how you look at it. So one way of looking at it is a positive net cash flow in this section isn't necessarily good. And the reason why that is you have to ask, where did the money come from? So looking at this example, the owner's given the business money and the business has gone to the bank and got a loan. So that's going to make this section positive, but they're not necessarily good cash flows. The owner can't keep giving the business money. That's not why you go into business. You go into business to make money, not to give it your money. And a loan, well, that's no good either, because when we pay the bank back, they're going to want not just the $15,000, but interest on top. So just because we have a positive in this section doesn't make it a good thing. Likewise, a negative in this section, and you can see this business here does have a negative of $1,000. That's not necessarily a bad thing. So look at the outflows here. We've got drawings and loan repayments. The reason why they aren't bad things is a drawing to the owner, as long as it's not excessive, that's a good thing. That's why you go into business, to make money from it. So taking out drawings is a positive. Loan repayments, they're excellent. Even though they reduce our cash flow, they also reduce our debt. We don't want to fall behind in loan repayments, so it's really important that we make them. So a negative in the financing section isn't really a bad thing. It's actually a good thing, as long as it's in proportion to the other sections. The format, very simple. We start with the section heading, cash flows from, in this case financing, inflows on top in the first section, first column, outflows on top underneath in the first column. We use brackets for the negatives, and then we finish with net cash flows from, in this case, financing activities.